And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, futures family. It is time for the market prep for Monday, May the 8th. My name is John Hoagland, along with Lacey, the center of the universe. Thank you for trusting us with your time this morning. Hope you had a nice weekend, got some rest in, maybe watched some Coronation of a King, and maybe said a few prayers for mankind in general, and are ready for the week this week. Mondays tend to be a little tough sometimes for me. I usually let myself kind of put some sort of context over the markets as the markets open up on Monday. Just going to be patient and look for the right opportunities. It is a holiday today in the UK, coronation holiday or something. Also a holiday in France. You can kind of see already in the volume in the overnight session, the volume a little bit light with the UK being on a holiday. And as far as economic numbers this morning, 9 o'clock, we're looking for wholesale inventories. Maybe not a very impactful release, but we're seeing a lot of talking Feds popping up on the calendar. This morning at 10 o'clock Central Time, Goolsbee is going to be speaking. 3:45 after the close, I see Cash and Carry has popped up on the calendar. We've got a smaller list of economic numbers this week. However, they're going to be very impactful. Remember, we have some pretty free talking Feds this week. Phil Jefferson tomorrow, Williams tomorrow. These are just the ones that are popping up on the calendar as we speak. Wednesday, CPI. We know that's going to be important. All eyes are on inflation. And then, of course, we have the EIA Petroleum Status Report also on Wednesday. Thursday, jobless claims and PPI, the final demand, is due out on Thursday also. Likely to be impactful. We've already got at least one talking Fed on the calendar here for Thursday. That's Waller. And we see Bullard speaking. But after the close, late on Friday, who knows where he's going to be speaking. But they will be popping up from time to time on the calendar, so we got to keep an eye out for when they are going to be speaking, of course. So this morning we've got U.S. stock index futures set to open kind of steady, coming off a little bit here before the open here in the NASDAQ, but we all know what these markets and what all of us are facing. There's economic issues, political issues, geopolitical uncertainties, and while unemployment numbers remain hot, and we are, pretty much near the end of the earnings season. Approximately 85 or 90% of companies have released their earnings. So that will kind of fade in the minds of investors and traders alike. Again, we're going to have a lot of talking Feds this week. They're going to be relatively active with pretty high probability. The U.S. trade ceiling pressures kind of more important in the mind, I think, of traders and investors, as it should be. We're getting a lot of yelling by Janet Yellen about that. Buffett has chimed into the banking system issues. He says they were guilty of very poor management. Banking leaders and shareholders, he says, should suffer for doing the wrong things. So Buffett finally chiming into what he thinks of the banking situation. Crude prices really kind of got to oversold levels last week. We've got a pretty good reversal there. And a lot of talking heads are saying, well, that's because there's expectation of lower possibility of recession. Are they really saying that? So it's going to be It's going to be an interesting week, aren't they always? Yeah, I'm seeing here, I heard Tuesday or Wednesday the president is going to enter into some negotiations over the debt ceiling, and let's hope that they can come to some sort of an agreement on spending. That's really the problem here, isn't it? So we'll see how that plays out over the week. We're going to be focusing on what these markets are telling us. Got to trade what we see, right? And make sure we're always protected by using stops. As far as the VIX this morning, it's up a little bit, 1746, lower than it was at this time on Friday, which was 1892. The dollar index a little bit lower this morning, 101.16, where it was 101.39 at this time on Friday. And the yield on the 10-year is up slightly, 3.49, was at 3.45 at this time on Friday. As always, please make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. We do have group coaching today at 12:30 Central Time. I have just posted the link in the chat to get registered for that. Bring your questions. If you have questions that you know about already, email them to me at jhoagland@topstep.com, JHOAGLAND @topstep.com, because then I can get prepared for them, as nobody knows everything, and I'm certainly one of those that does not. I don't claim to, and I never would. I learn as much from those group coaching sessions as you guys do. So if you do have a specific question, you can help me prepare for it by emailing it to me. If not, any and all questions are welcome. If I don't know, I'm going to tell you. I'm not going to lie to you. So again, group coaching today. After that, we've got Make Hogue Money. Hopefully we'll see you there. You can watch that right here on YouTube if you'd like. And so we're going to get down to business here. It's good to see everybody. Good morning again, Hegel Michaels. Good morning, Charles Will, Jay, Brian, Henry G, Alejandro, Shaw. Good morning. Lacey says good morning to you as well. Scott saw and he conquered. Grounds hero. I've got my nice hot coffee. These Yeti coffee cups keep your coffee hot for like 3 hours. You got to be really careful when you first pour some coffee in there. Timothy, good morning. Kevin, my good friend, good to see you. Thanks for the info over the weekend. George, and Lacey says good morning to you as well. Sarah Hall, prayers and love to you as always. Naztic, Andy, Bill, Austin, good morning. Mark, Vince, my guy. Fed's quarterly loan officers survey due at 2 p.m. Eastern Time. Insight on lending and credit. I was going to put that on the list because, you know, a lot of focus on the banking system here, and we'll certainly keep an eye on that. It'll be right at the beginning of Make Hogue Money. We'll see if there's any response in the markets to whatever they have to say. Shai, good morning. Charles, Jason, Teo, Chad, Joe, good morning. Discipline, good idea. Dan Trader, Jason Lewis, JD. Wow, those Thursday and Friday opening ranges have been really nice. Wow. When the opening range trade works, it's a beautiful thing. And I think that there's a reason why it's kind of cyclical. Just think about this. If the opening range is the upper or lower extreme with any consistency on a daily basis, day traders are going to notice it. And when they notice it, they're going to start using it. And the more of them that use it, the less likely it is to play out as expected or as one might expect. So you get a whole group of people noticing the opening range trade has been working. Let's jump in. They jump in, they wreck it, they keep trying for a while, and as soon as they abandon it, it starts to play out again. Just what the market does to us. When we don't want it to happen, it usually does, and when it happens, we don't want it to. But yeah, the opening range has been pretty good for the last week or so. Yes, Kevin, the president, holds emergency debt ceiling talks at the White House on Tuesday. Let's hope they can come to some sort of an agreement, of course. Marcelo, good morning. JT, good morning. Bluebell, good morning. Robert, Torres, Carlos, my brother Rick, good to see you. Love you. Vlad, good morning. Phil, Byron, good to see you. What do I think of Bitcoin? I don't really look at Bitcoin that much. I've been kind of pondering it. I was talking to a couple of people about it, And it's something that, I don't know, as an older person, I tend not to trust newer technologies. Bitcoin is off pretty good this morning, about 6.4% as we speak. So Bitcoin down around 27,850 right now. Nisa, good morning, Grounds Hero. Java, yes, right. Chris, what up? Good morning from Atlanta. Steven, good morning. Chris, Christian, Jeff, Kevin, Shaw. Trying to put an ice cold beer into that. Yeah. I may do that. One may do that. I've got a couple of those Yetis. They do tend to keep things nice and hot and nice and cold. Dude 32, good morning. Thanks for popping in and saying good morning. Can we talk oil? Yes, we will talk oil. We will. Crude screaming to the upside, up over 2% here this morning. We're going to take a look at the charts. And what the charts might be telling us is a distinct possibility for today. All right, let's jump in. Of course, starting with the daily in the E-mini S&Ps. Where are we? What have we done? Have we done anything? Not really. We're still range bound. We've tested both extremes of the balance. We added 7,800 off the low here on Friday. So that says, well, we did attract some new business, probably to the long side on Friday. But overall, balance remains. The weekly kickoff levels remain largely the same. To be precise, the weekly kickoff levels in the S&P are 41.94 on the upside, where it was 42.06. Which really kind of put in the high last week. And then the low is 40.78, which remains the same because we did reject below that level. I think it still looks like kind of a valid level. So one of the things that we see in this daily chart is we've got last week's range outside of weekly kickoff levels. The market is range bound, and until it breaks out of this range, it's likely to kind of close in on itself, kind of the way the weekly kickoff levels have this week. So here we are again, relatively centrally located inside of balance. Shorter time frame traders are likely to be in control unless something more serious changes that. So 7,800 increase on Friday wasn't a big number. Volume was decent. It was over $1 billion in New York. But again, futures kind of cuts off on the way up, brings in volume on the way down, kind of cuts off volume on the way up. Is that healthy for the auction? Well, not really, but we did add open interest. So, you know, they're kind of a wash, I would say, from Friday. There was no real good information. And it was actually kind of a weak rally. Here, take a look. So we opened with the gap. We left the gap. We just continued to push higher. We kind of finished a little bit of repair from here and trading up to this point of control. There's still naked points of control above and below this market. Where are we this morning? Well, I'm going to be really patient in the S&Ps today because overnight inventory may be a little bit long, but pretty much reconciled. We're keeping things pretty close to settlement. We do have, and on the profile, it's kind of a weaker profile, and we have a unfinished gap from Thursday to Friday, and this is a very prominent naked point of control down here. This is going to hold a lot of magnitude or magnetic force should price start heading that direction. I'm not looking for this naked point of control to stick around for very long. Does it change things? It could. It puts us down near weekly kickoff low, last week's low, which can be an area where we may see the market change. We're a long way away from that, and I'm not suggesting any time or place when that is likely to happen. So here's the profile. The initial balance low. We've got a double distribution trend day. The market did not leave a late spike. It did not close all that well, if you ask me. So what do we have in this profile? We've got toothiness, we've got holes, we've got anomaly here, we've got just a lot of kind of insecure, whatever it is, kind of upward movement here. It wasn't all that confident. You can kind of tell that as well by the volume. So it doesn't look like we're going to be opening with a gap. Looks like we may be opening above value, but in range. And look at where the value ended up at the end of the day on Friday. Here's the TPO value right at the low because the point of control was locked down here. What about the volume point of control? That was also lower. So it didn't do a good job, really, of bringing value higher on Friday. I'm going to be really patient. I said on a short this morning that Mondays, as you all know, tend to not be great days for me. It's changed a little bit this month or this year. I've had a pretty good string of good days on Mondays, but when the market opens like it is, in range, centrally located, short time frame, controlled, I'll be patient. We did have a couple of opening range trades here that provided wonderful opportunities. But we opened out of balance and out of range here. We opened out of balance and out of range here. Look at the TPO charts. So almost a normal trading day here on Thursday. Very wide, prominent, naked point of control down here. Here's the profile again. We've left a gap down here, weakness in structure. We've got weakness in structure below price in the profile from yesterday. We do have visuals and a relatively prominent point of control above the market as well. So my main focus, I think, early in the week this week is if they have the opportunity to trade near the extremes in the longer time frame, medium time frame balance. I'm focusing on these. If I'm going to be looking for trades in the day time frame, I'm going to be looking for reference created by structure in the current daytime. Hope that makes sense. Hey, Tom. Okay, now let's look at oil, which just opened. So we've had 3 straight weeks of downside movement and momentum. On Thursday, we took a deep dive. We could not close below there, could not close below the weekly kickoff low, which, well, last week it was in a little bit of a different spot here. It was 70.90. So, yeah, we did close below it. But with this excess down here, this market is primed for a potential change in market state. We have 1, 2, 3, 4 points of contact on this trend line. So this trend line is somewhat important for us, especially today. If we break out above and accept above this line, I would look at the next test to be weekly kickoff high, which is this week, 75.30. Could be a decent 100-point trade for us. Or if we can't break out above it and we fail, we look for the market to return back down to weekly kickoff low this week, which is 68.50. We have weekly kickoff levels inside of last week's range. Again, I'm looking for this market to coil and build some more energy before choosing a direction, whether it is to the downside or to the upside. Here's the 30-minute chart. We know we've got a gap. So we got gap rules, right? We've got overnight inventory that looks significantly long. Remember, some of our participants in the overnight session are not playing today. UK and France, whatever they provide as far as liquidity is concerned, isn't there and wasn't there. So we're starting to see our overnight inventory maybe a little bit nervous about holding on to these longs. If we can't close the gap relatively early, we're looking for continuation. But I'm also being wary of an overnight inventory adjustment that could bring us to a better trade location if we were looking for longs. Up against the high here might be an interesting opportunity for us as well. What's the TPO chart telling us? Well, the TPO chart is short covering P-shaped profile, but we added 4,400 in open interest. We still left a little bit of this gap down here. The initial balance to the low of the session. So a normal variation, extreme day to the upside. It was not a late spike. We've opened long inventory, overnight inventory, after short covering meets new longs. That's what I'm calling that open interest on Friday. Here's our lows. You're not going to see that big spike to the downside because it happened in the overnight session. We have excess. We have a degree of excess. We've got a gap below that we may need to check. We've got a gap here that we may need to check. Weak structure all the way up to this naked point of control up here. Kind of like I'm saying this thing could go higher unless it goes lower. My main focus is on this trend line, which is really going to come across here on the daily chart. Let's call it 73.70. 73.70. And then, again, acceptance above that takes us to weekly kickoff high, where I would think a longer term market state change could occur. That trend line is a very tasty looking opportunity, I think. One way or the other. What about the NASDAQ? Well, the NASDAQ is presenting as stronger than the S&Ps, and it has been. We've got really range-bound activity here. The NASDAQ is much more steady high here, much more even high here, a much more even low here than the S&Ps. Friday on this big push to the upside, we added 16,000 in open interest. Now, to me, that's saying something. That's a big number for one day in the NASDAQ. So we brought in some new business that pushed price right up to the upper extreme here. Really looking forward, if I were going to be trading NASDAQ this week, for opportunities up here against last week's high. Last week's high, I'll bet you there's some lunkers there. So here's Friday. Overnight inventory, long, maybe a little long, maybe a little short. What is it? This profile is so toothy on the volume profile, it almost bodes for repair. Maybe back down to settlement, maybe back down to value low, or even this high volume node down here around 13,159. But I'm not sure what's going to happen. I don't want to take trades just thinking that that's going to happen. I would almost rather see that happen, focus on the extremes of the range at that time, and look for opportunities as the day goes on. Because as we know, as I mentioned, and as sometimes even comes true, when we open in range and value, some better trade locations are likely to come as the day goes on. So stay patient. Here's that TPO chart. So again, a double distribution, lots of uncertainties, lots of anomalies, lots of holes, double distribution trend day, points of control centrally located, possible repair. Okay, it looks like we're going to open between an assumed point of control in this distribution and an assumed point of control in this distribution. We're trading between those points of control. The tendency is to trade to both relatively early in the session. So be patient. Be patient. Be okay missing a trade for the benefit of a better trade later on. Here's gold. I've mentioned I'd be looking into silver a little, but I don't think I've done quite enough research to be able to speak on it with any real expectations or good ideas here. So I'm going to continue to watch it for a little while, and I will add it. But anyways, here's gold. It's back to central location. Friday's long liquidation brings price right back into balance, losing 9,900 contracts on Friday, leaving excess at the high. Even lows here, but we're nowhere near the extremes of the medium time frame area of balance that this market is having a very difficult time getting away from. The weekly kickoff lines are inside of last week's range. Looking for something to happen, something to change. Here's the TPOs. B-shaped profile, losing 9,900. That was a long liquidation day. Whenever you have a B-shaped profile like this and you lose open interest, it's indication of long saying, well, let's get out, even up, and see what happens next. Now we've opened above value, but in range. Again, I'm going to stay patient. I think that there's probably better trade locations as the day goes on. What about the euro? Euro remains very range bound. Couple of things we saw last week that kind of created, I think, the opportunity for me to leave the weekly kickoff levels largely where they were, and that is exactly where they were. But again, centrally located, short time frame controlled. We added 5,600 in open interest. So there was a period of time in this area of balance that we were losing open interest almost on a daily basis. I think we've started to see some new blood, some new contracts being created, new interest in the euro. The problem is which direction are we going? Are we too long or too short in a specific time frame? I think overall we're largely short time frame controlled by the level that we're at. We tested lower, we tested higher, we're in the middle of it. No real decision making involved here. The market opened out of range, in range and out of value. Overnight inventory was a little bit long, but I think it's done enough gyration here to reconcile itself. I don't see that our short time frame, medium time frame, long time frame, any time frame is too long or too short at this level. So I'm going to be patient. I'm going to, again, let the market establish early ranges and focus on those ranges to limit risk. It's pretty much all I got here for the euro. Kind of an unfinished repair down to this naked volume point of control. Test it to here. Could test up to here. It's kind of a random walk here, so I'm going to be patient. And in doing so, I'm maybe going to get a good idea on where I think the shorter time frame day traders are getting too long at the highs or too short at the lows. And then I'll use those lows or highs to manage my risk against losses if there is a continuation. I've got to try and stay patient in this. And especially because it's Monday. Here's the 10-year. Again, excess at the high here. Let me see what we got here as far as, I think we've expanded the high of the weekly kickoff range here, 116.18, just a little bit. But with this excess up here, we're still, these markets, so many of them are so range bound and so centrally located inside of range. We're waiting for CPI. Know that there's expectations for all kinds of things that could and might and probably will happen this week. So the market is sitting here kind of centrally located on the court, ready to volley if it comes up here or ready to volley if it comes down here. Stay patient. I think there's going to be good opportunity this week. And the last thing I want to do is take myself out of the game before we get to those good opportunities. I'm not talking about holding positions into CPI or PPI or something like that. I'm thinking, I think we're going to increase a little bit of volatility. And as soon as the extremes are created, then I can jump in. What's the TPO chart look like here? A normal trading day here on Friday. A normal trading day is any day that the first hour of the trading range remains the extreme of the initial balance on both sides. So the first hour, and then we range the rest of the day. This is a prominent point of control. We've got a little bit of a gap. We've got a little bit of repair left to do down here. So this market, to me, could trade down to this volume point of control down here, or it could trade to the point of control up here, or both. And that might be something that could happen if one of the talking feds says something. How cheap can natural gas go? We've got downside structure. Downside structure remains. Can you pull back today? We added 7,600 off the low here on Friday. That's not short covering. That's new longs. the downside auction may be beginning to start to suffer here. What did the open interest do on Thursday in natural gas? We added 7,700 on Thursday to the downside. Maybe we just get out of all of those. What's the 30 look like? So overnight inventory long. Don't see that it has necessarily been reconciled yet. Got a naked point of control that we've just reached in regular trading hours. No gap close. We're looking for opportunities to buy longs unless that proves wrong. A good trade location might be created by overnight longs that decide they're going to get out. So I'm going to stay patient in that again. Sergio is buying natural gas at $1.80. $1.80. Well, weekly kickoff is $1.80. I like your vision, Sergio. I like your vision. So it is just Monday. Got a week full of opportunities. Make sure you protect capital. Make sure you take good risks, small risks for bigger rewards. Going to be a lot going on this week. I'm going to be here with you the whole way, and I'm looking forward to seeing some good outcomes for myself and for you. That's our goal here, is we are looking forward to your success. So let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Disciplined, as Joe D said earlier. And just get started as you see a good opportunity. Don't force things. Think the idea that if you're a trader, you'd better be trading is something that hurts a lot of people. Wait for the right opportunity, and we'll be back here for group coaching and make Hogue Money at 2:00. And I don't know, maybe we'll even get a reflection in at the end of the day. And we'll see how this day finishes out. See what we're looking at for tomorrow. Talk tomorrow morning and see what tomorrow looks like. Thank you again for joining me, my futures family. Blessings to you all. Be kind to yourself and others. Say a prayer for peace, and I will see you at 12:30 for group coaching. Looking forward to it. Have a great session till then.